Hi, everyone. My name is Adeo Resi. I'm here joined by Brian Bell to discuss his venture capital career and his venture capital firm. This is an opportunity for you to meet managers doing really interesting things in the world today. Brian definitely falls squarely into that bucket. So, very excited to have you here, Brian. I can give an intro about your AWS, Microsoft, and venture career, but I'm sure they'd rather hear from you. So let me pass the baton to introduce yourself, then we can jump into some dialogue.
Yeah, hey everyone, Brian Bell, Team Ignite Ventures. I went through VC Lab back in cohort seven. Technically, this was for my second fund. Historically, I worked in finance for the first decade of my career. Did a bunch of startups in the second decade. Demand gen for a few, product for a few more. Built a bunch of AI powered MarTech, ad tech, sales tech kind of tools. Got deep in AI. Led the AI category at AWS. Launched SageMaker Marketplace. And then I went to Microsoft, led all the categories there on the Azure Marketplace team, including AI and a bunch of others. So I ran this large team that basically scaled startups at Microsoft. Realized I was having a lot more fun helping founders than playing Game of Thrones at Microsoft. So started investing on the side with my own money for a couple of years, and then Team Ignite started as a syndicate about 5 years ago on AngelList, and quickly removed myself from AngelList for a variety of reasons we can get into. But after a couple of years of running syndicates, I realized I needed to have some dry powder. So my very first fund was a little rolling fund for Y Combinator startups. And we're now raising that second fund publicly, which I can talk about why you shouldn't do that as well. And then our second fund was a seed fund focused on B2B software, fintech, AI marketplaces that we launched with Decile and Adeo and Mike and these guys. So yeah, happy to dig in.
Wow. I mean, you covered a lot of stuff really fast. They're like finance, startups, big tech. So I think a lot of the way I look at you is you were in big tech when you really got the bug to be an investor. Is that an accurate assessment?
Yeah, I mean, I was getting my MBA at Berkeley, and I was doing the part-time program in my mid-30s, and mainly because I couldn't take afford to take 2 years off, or it didn't make sense to take 2 years off. And I had a buddy there who was in corporate VC at the time, and I was like, "Yeah, angel investing, I might get into that." I did the venture capital investment competition there that they do every year, and I think in the fall. And we were finalists in the region, and I had a good time. And I remember thinking, like, these VCs don't know what they're talking about. Like they've never been operators, they've never like built anything, or like a lot of the VCs I interacted with. And I was like, maybe I'll do that when I like retire, like it'll be like something I do at the end of my long, big tech career. And my buddy said, "Hey, you might want to get started because you're gonna make a lot of mistakes." The old phrase is takes 10 million to make a VC. Meaning like you have to waste $10 million, like throw it away on startups before you actually know what you're doing. And I think that's rather true. I feel like when I started, I was very confident, and now looking back after 200 investments, I didn't really know what I was doing until about 100 investments in. I really feel like I've learned a lot after 200 investments, and that's the old adage in like real estate too. If you talk to real estate investors, they'll be like, go do 100 deals or go look at 100 homes before you make one investment. And I think the same is true in startups. You got to put your money where your mouth is and make a lot of investments before you learn. So I started, as Microsoft and Amazon stock was on a tear, I just started investing in funds and investing in syndicates and investing in direct deals. And um, I made the error when I started of writing like 25K checks into each startup. And so I was quickly like running out of funds. In hindsight, that was much too large for my bank account anyway, like of an angel sized check. Yeah, so you want to budget and budget for optionality and budget for learning.
So, okay, okay, super fascinating. Wow. I mean, I don't even know where to begin here. I hope questions are coming in the Q&A already, but let's just start with unpacking. So you got a little bit of the bug and you wanted to start investing and you started writing 25K checks, right? And you mentioned that that was too big. So maybe with the many lessons of hindsight here, let's go back to I was getting the bug and I wanted to start learning, what would you recommend that you do now that you have all this experience? So take yourself back and say, I should
Yeah.
have wrote 10,000 or 5,000, or what would you have
You
done different?
you you want to budget such that you can hit 100 investments over 3 to 5 years, I think. Um, a lot of VCs will concentrate, they'll do 15 or 20, but these are VCs that really know what they're doing and they're sitting on boards and going really, really deep. That's one way to do venture. That's the kind of concentrated approach. I do a much more um, high volume strategy. And I think most angels should in kind of the pre-seed and friends and family rounds.
So
Uh,
100, so just to give a set, divide that by three, so you're looking at roughly 30 some odd deals a year. Um, and where does your head fall on you need at least 12 deals to make your return per year in as an angel. Because you're saying you want almost three times that, right?
yeah. So, sorry, my daughter came in. Um, Should have locked the door. The joys of working at home. Uh, so I think, if you mathematically run like a Monte Carlo, you can run a Monte Carlo like on an early stage portfolio, right? Or you can just mathematically think probabilistically. And you could go to like the ChatGPT in O3, and it's a high-end reasoning model. I'm sure some of you have played with it. You could say, hey, mathematically, run me through a formula to guarantee that I hit an outlier, right? And it's really fascinating. And it'll run through the math of the probabilities of hitting a unicorn and how many startups you have to invest in at the pre-seed to guarantee probabilistically, statistically that you hit an outlier, which is what you want to do. That's the name of the game. It's a power law game, right? And so if you want to have a 95% chance of hitting an outlier, you have to invest in about 150 startups.
Wow.
That's just mathematically how it is, probabilistically, and that assumes you're not good, which you probably aren't if you're just starting, and that assumes you don't have better access than others, which is probably a safe assumption if you're just starting. And it assumes you can't add unique value, which is probably the case if you're just starting. And so, you have to assume that you're average. Everybody thinks they're above average, right? What's unique about me as a VC is I assume I'm not. I assume I'm average. And so if I assume I'm average, how do I go about investing? Well, I should work really hard and make lots of investments, right? And work very hard to add value. And if I'm really good, if it turns out I'm really good, I'll have really good results. But if I'm average, I'll have pretty good results. So that's
Right,
what's
right.
different about me. Yeah.
Yeah, so you're optimizing, it sounds like. Okay, so going back to your earlier self question, you would have said budget to get about 100 deals done in 2 or 3 years. So
Three to
uh
five. 3 to 5.
okay, 3 to 5 years. And that's a little bit below the 150 you were talking about. But you'll get the learning and you might hit a unicorn. Is that the theory?
That's the theory. Yeah. Statistically. Yeah.
Any other kind of recommendations to yourself in that time period that you would say go just
It's interesting, right? Like as you progress in your VC career, how things shift, right? You'll realize how bad your deal flow was, when you got started, and some of the really bad investments you made, 5, 6, 7 years ago, like that, like I did, uncapped safes, stuff like that. You just make mistakes. You don't know what you're doing. But over time, your deal flow will get better because as you make more investments, Metcalfe's law, right? The value of your network expands geometrically to the nodes in the network. So that's our whole ethos at Team Ignite, right? Is build a large network, of founders and VCs, mentors, partners, advisors that can help ignite startups. It's in our name. And so we really much take that kind of networked, scaled approach. You'll realize like you have to build a really good funnel of deal flow, which means you have to build a really great network. Then you have to learn how to pick the best startups, which you'll constantly have to reinvent because every 5 to 10 years there's a platform shift. We're right in the middle of one now with AI. So everything's shifting. Capital is eating labor. AI is eating labor. AI is eating everything. So we're in this like big platform shift now. So like old models, if you have old mental models or even machine learning models that help you predict which startups are going to succeed, they're probably outdated. Um, and then you have to be able to add value, right? So you have to, so like, let's imagine you got good deal flow and then you can pick well, then you have to win, right? You have to be able to get on the cap table, which sounds easy, right? I have money, I'm an ATM machine, right? But turns out the best founders have their pick of money. That's actually a good way to know it's a good deal. The founder starts pushing back, like, why should I take your check? I'm oversubscribed. Like why do I want your, 25K or 50K or whatever angel size check you're writing? So that's a challenge, right? Your check size is your strategy, and that can be a challenge for me. So far, I've pretty much written 25K checks. So sometimes it can be a challenge even to get on the right cap tables. They're like 25K check, get out of here. So I have to sell myself, sell the network, sell Team Ignite. And then you get on the right cap table, you're able to win. Then you have to add value, right? So now every month, every week, you got to be available 24/7 to help that founder. And yeah, it's quite the journey.
So it sounds like you kind of tackled these almost you were working on them somewhat in parallel, but they
Yeah.
happen in serial, right?
Yeah.
Because if you don't have the network, you're not going to get on great deals, right? So that has to sort of happen first, right? Then you have to get on with the check size and the strategy and pick the winners and get on the cap table and then add the value. And that's almost like they go one by one, but they do also happen in parallel as well. Maybe you could talk about that or.
Yeah, everything's happening in parallel, right? Because you're doing it all at once. Um, I went through this phase recently, when I was raising my seed fund, which was fund two, and my YC fund, which is fund three. And I did my seed fund. So I was raising two funds at once, which I don't recommend. Don't do that.
Yeah.
Um, I'm on fund three now, which I'm running with you guys on Decile, and I'm raising it publicly so we can talk about it, which I also don't recommend. So you're kind of doing everything in parallel, all at once, everything all at once. And you end up working 7 days a week, 70 hours a week. So you have to love it, right? You have to like really like want to do it because if you don't want to do it, you're just doing your LPs a disservice, you're doing your founders a disservice, and you should walk away and do something else. It's 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 a weird career in that you have to like be comfortable with ambiguity. You have to be able to make decisions uh very quickly, right? Because you're saying no 99.9% of the time. You're looking at hundreds of deals, if not thousands of deals per month, and you're having to say no repeatedly in a polite way without pissing people off, very quickly. And we have some AI systems for that we can talk about, but um, yeah, yeah, it's a labor of love.
There's some questions coming in the Q&A, but one of them, I don't want to get too far away from the questions before. So Evgenia is asking, was the MBA useful for VC networking? I'm also in my mid 30s transitioning to VC after a similar career.
I think so. I think it's great because you get a bunch of people about the same age, all kind of wanting to reinvent themselves or expand their horizons and accelerate their careers. And I don't think it's absolutely necessary to be a VC, but it certainly can't hurt. So it's a good place to spend a few years building a network and lots of high quality folks. You can even run a student-led VC firm. I see a lot of people do these like micro 1 and 2 million VC funds raised from students, deals sourced from students, backing the students in the MBA program or on campus. And so that's definitely a movement that's happening on campus now.
Okay, and then Guillermo's asking, what are some of the key differences that you did not expect after the 200 investments between the start and now? So like, wow, I never expected this to be true.
Well, the old phrase is in marketing is like half of my marketing dollars are wasted. I just don't know which half. And I think in VC, half your startups are going to zero. You just don't know which half. And so you have to be really disciplined with your check size and your strategy. Um, and you'll be surprised at how many mistakes you make. And so you got to do the work and take notes and have, a thesis around like why am I really investing in this company? And and then you have to look back at everything you've invested in and be honest with yourself, right? It's like, why did I make that decision? And and get better at that decision-making process. Um, and there's no hard and fast rules, right? There's like 100 things we look at when we make an investment, and some things, if they're there, it's a red flag and we won't invest. Some things are yellow flags, and it's like we have to look closer. But you're basically just trying to get to an easy yes. There's like easy yeses and easy nos, and if it's not an easy yes, it's an easy no. That's how you have to like think about it.
Are you doing deal memos? Because that's traditionally the way that managers keep track of their decisions to look back and say, why'd I do this again? And
Yeah. Yeah, you got to come up with a process to write a deal memo, which is hard if you're making 100 investments a year like us. That means I'm writing 2 deal memos a week, which is a lot of work. One way I scale my time is I have part-time MBA analysts, right, doing the first drafts of these deal memos and the first pass of the diligence.
have you seen our new AI deal memo writer, by the way?
Well, yeah, and you should be using AI. I mean, O3 is incredible. You can dump the data room, the transcript of the founder call, and give it a framework. And I have this prompt I've built up, and it's PhD level reasoning, and it'll reason through, and sometimes do a better job than you can
Yeah.
of analyzing a startup and where the blind spots might be. It's not going to make your decision for you, but it's like having this other person to collaborate with, especially the O3 model. It's pretty amazing. But yeah, tell me about your I haven't
Yeah,
looked
I'd
at
love
your
to. I'd love to show it to you. So basically, right now you can forward any email that you have, and it will put the deal and all the attached documents into the system. So
That's
you load
cool.
all the data in. You can then write a little synopsis of your thinking in a question, and then hit this right with AI, and it will suck in all the email history, all the files for the thing, your little notes, and it will write out that. So yeah, it's pretty awesome. I'll show it to you offline. But
Yeah.
yeah, because a lot of it, unfortunately, a lot of the deal memo was you're bringing up is like tedious stuff, right? It's like what? One part analysis, nine parts tedious stuff, or 1 and 4, some ratio, right? Because you
Yeah,
have
the AI is sufficiently advanced now, especially with O3, that it can do first passes of data rooms and decks. Um, and
exactly.
and it's making us more efficient. I'd say it's a 2 to 3x multiplier on our time right now. And I think that'll only get better with each successive generation of models. I mean, you got to understand AI is not getting twice as good every year. It's getting like an order of magnitude better every year, which we're just not used to seeing in technology. We're used to like Moore's law, which is pretty breathtaking over decades. Now we're getting an order of magnitude more AI every year in terms of its algorithms, its algorithmic efficiency and capability, but also the compute thrown at it. So it's pretty breathtaking to watch.
Yeah, so we're getting not just better algorithms, just better throughput. I mean, the 10 million context llama model.
Right.
I
Yeah,
mean,
I could feed all 200 investments I've ever done into a 10 million context window, and just say, yeah, what have I learned? Like every podcast I've
why
ever
am I
done.
dumb? Which
Yeah,
is better?
yeah, every podcast I've ever done. You've been on my podcast, right? Like I could write probably a book with the 160 episodes of the Ignite podcast now. Just dump it into ChatGPT or Llama. Just be like, write a book for founders on like everything that we've learned on the podcast and quote all the amazing, founders and VCs and partners that we've had.
So I want to come back to AI and VC in a moment because you have the AI background. You're a product guy, you're a VC. Maybe not many people like you to talk about this with. But before we go there, you said so many great things. One of the things though you brought up I want to talk about quickly is red, yellow flags, just for everyone's benefit here. What are some of your red and yellow flags? You don't have to go into too much detail, but like, hey, if I see this, it's almost definitely a no. If I see this, it's a warning sign. What are some of those?
Yeah, I mean, there's a big checklist I've built up over years of doing this and my due diligence, right? And there's no hard and fast rules, but there are some things that you should pause, right? If it's not a C corp, like you probably shouldn't invest, right? That's it's not the top most parent entity, you probably should invest, stuff like that. Um, you kind of need to do a background check a little bit too on the founder. You need to kind of trust but verify what they're saying. Not that people are fraudulent or anything like that, but people do stretch the truth. And you kind of want to check on stuff, right? if you see a founder that sounds like too good to be true and they have like 400 LinkedIn followers, it's probably like suspect, right? They probably haven't, how does somebody have 400 LinkedIn followers if they're so impressive, right? Like what's going on here, right? Unless they're like 20 years old coming out of college. So there's just stuff like that you have to look at and check. You should talk to a customer, right? Go ask for a customer contact and go talk to somebody about this problem. Hey, you need to check like all of the logo churn and the revenue churn. That's something that a lot of VCs will fail to look at. Like, oh, it's great, like you 4x revenue, but you have 30-40% churn, which means it's a leaky bucket and they're just not going to reach escape velocity, right? There's just lots of little things like that. Uncapped safes that I mentioned, right? Oh, I'm raising on uncapped safe, which effectively means that you're raising at the priced round valuation. So you definitely
Not a lot of benefit for you as an earlier investor
right.
in
So
cap
you
safe.
want to be on post money safes typically in a pre-seed situation or seed. Some founders will raise. They'll do a trick where they raise on pre-money safes, which the mechanism of pre-money safes is you literally every safe they write, they dilute each other, right? So you don't know what like you're buying. So you're getting diluted every pre-money safe they write. So you got to be careful with that, right? Because you'll end up owning, 40% less than you thought of the company when they convert and the price around. And the list goes on. There's just dozens of things like that you'll learn as an investor. I remember being like you have to look through the cap table and verify that you're getting the best terms of the round, right? You could be, oh, like really happy to get on the cap table at a 15 million post money safe. And then you start looking at the cap table, like they've been writing a lot of 8, 9, 10 safes in the last like 30, 60 days. Why am I investing at 15? So get an MFN side letter, right? Try to get some pro rata, right? A big mistake I think I made in my second fund is I should have reserved some capital, right? SPVs are really soft right now. I can't fill SPVs, even though I have 8,000 people on Team Ignite, and I've done 170 SPVs in my career. I've done a ton, so I know how to do them. And I can't fill them right now. The money is just so everybody's holding onto their money right now. So a lot of my pro rata is just, I can't execute on it because I have no reserves in my fund. So that was a big mistake. So for fund four, my next fund, I will definitely reserve some capital. I don't know what percentage yet, but something so I can
And that's
execute
for
on.
follow reserved for follow on, just to make it clear for everybody. So if you have pro rata or the company is raising a new round and they come to you and say, do you want to invest? So it could be either you have the contractual right or just the opportunity and you really like the company. If you can't fill it with an SPV, you may want to fill it yourself, right? Is that essentially what you're talking? Well, out of curiosity, what percent of opportunities for follow on are you interested in? Is it 10, 25? It's not 100, right? So,
No, definitely not, right? So the stats of pre-seed and seed is about, let's just call it about 50%. It's maybe about 60% go on to the next round. I think 40% of all seed stage startups raise an A eventually. So that's kind of the mortality rate. And then there's some, sub percentage of those that you'd want to invest in. Call it the top, 10%. These are the companies that they're just catching fire. They have product market fit. They're growing
it'll be
10x
4
year
or
over year.
5% then,
It's
right?
probably 5 to 10% that you actually would want to follow on. Yeah.
Okay. There's some great questions here, but I have a lot of questions for you too. So let's involve the audience. Uh, okay, so there's quite a few that I like. Um, if you had to go back and raise the first fund now, Manoush is asking, what would you avoid doing with the lessons you've learned?
Well, yeah, I'd run it with somebody like Decile, not on AngelList because they'll cross market to your LPs. You want to control the relationship with your LPs and own that relationship. That's first and foremost. I
Yeah,
would,
so some platforms, this is actually, can I double click on this?
yeah,
And
yeah.
you can think about other answers. So some platforms, Carta is notorious for doing this. AngelList is also notorious for doing this. When you add an LP in, there's all these like, oh, come and do this other AngelList or this other Carta thing. And you're like, wait a minute, these are my LPs, guys. And they're like, tough. Thank
Oh
you.
yeah, they're on the platform now. Yeah, we're gonna cross sell, upsell them other funds, other products. You know, literally funds that directly compete with mine. You know,
Yeah, not
not
great.
good. Yeah. I would do a traditional fund out of the gate instead of a rolling fund. Rolling fund's a great way to get started. You guys have a start fund thing now that we can talk about. I think that's a really great innovation for the industry. Um, the main thing is just to get started. Like, what would I do differently? Um, it took me 2.5 years to raise fund too. I mean, from when I went through VC Lab in the summer of 2022, we're sitting here almost 3 years later now, Adeo. That's pretty wild. From when I like probably recorded the video to apply. Um, it's a journey, man. Like it's a sales job. Somebody told me this. It's like, well, I hope you like sales because it's a sales job.
I hope you like sales. Yeah,
Yeah.
amazing. And here's the thing. I mean, it's not easy, right? Like you're
No.
like, why? We've had these conversations one on one. I'd love to have a private follow up with you too. Um, that like, Adea, why is it so hard? Like, I'm a good investor. I'm making good deals, and it's like it's challenging.
Yeah, let's be clear. Like I'm a top decile performer. My fund one's top decile according to Carta data. Fund two is top decile, and I'm still having trouble raising fund three. Like I literally have great performance. I have tier one investors backing my start. I'm getting in before Insight, before Benchmark, before first round, before Craft, like before YC in a lot of cases. I'm investing before YC even lets them into YC. And yet, like here I am, fund three, just grinding it out, slowly getting like 100, 200K, 500K checks to raise a $10 million fund. And I'm a top decile performer, and I'm having like it's hard. It is not easy to raise a fund.
Yeah, it is. I mean, I wish I could phrase it differently. A lot of it's a bit luck, like you know the right person and they happen to be an LP and they decide to stake you, so that can be one part, but the it's probably one part luck, practically speaking, and one part hustle. And so you could have a lot of luck and you'll probably need a lot of hustle. You could have a tremendous amount of luck, in which case you might need a little less hustle, or if you don't have that much luck, you're gonna need a lot of hustle, right? So
Yeah. Yeah. It's yeah, you can get lucky. Somebody said it was Martin. He said it basically comes down to on your first fund, probably your first two funds, like how many rich people do you know and how many trust you? Right? So like you have to look at your network if you're going to raise a fund and be like, well, how many rich people can I get to how can I convince a bunch of rich people to invest in my fund? Because you're not going to get family offices on fund one or probably fund two. You're not going to get institutionals like pension funds and stuff like that. Um, it's going to be a bunch of high net worth folks. So then another challenge for me and Team Ignite is we're not a niche player. We're a broad-based, early stage firm, right? That's kind of how we play the game. We think that's the right strategy to generate the best returns. It's not a good strategy to raise money. Like the best people that have gone through Decile and VC Lab, they have really niche strategies like to fundraise, like Geek Ventures with immigrant founders, right? That's like you can go to people and it tugs on their heartstrings. Hey, I'm an immigrant founder. You're an immigrant engineer. Like we're gonna back people like us, and like you can fundraise easier that way. When I go to people, I'm like, hey, we're this big networked, Team Ignite. You should give us money. Like it's hard to resonate. Like join the team, stuff like that, but help
that's
startup.
good. But yeah, so maybe I can explain this kind of in a simpler way. When you have a focus thesis like immigrant founders or like biotech, it's very easy to connect with an LP because you're like, look, you're an immigrant. While we're backing it, yeah, that's amazing. Or biotech, you work in biotech or you care about biotech because your mom got sick or whatever. You should back this biotech fund. And they're like, yeah. When you're a generalist, right? When we're backing lots of different things, you don't have that commonality with the LPs to bond over. So it really becomes about you, the person, and your track record. But thankfully, at this point, your track record's pretty good. just so everybody knows, about 17% of LPs are interested in generalists. So that means that 83% of LPs are interested in specialists. So that just narrows the market a little bit if you're a generalist VC to, less than one in five are appropriate for the fund. Um,
Bingo. Yeah,
yeah.
so that's something, I should have done an AI fund in hindsight, right? Because I have an AI background. I probably could have raised a $30 million fund. But
Actually, yeah, I mean, you do have an
yeah,
AI. I want to go into
yeah.
AI in a moment. There's lots of questions coming in, which is great. But finish your point. Sorry.
No, no. I think in my heart of hearts, as a finance person with a CFA level one anyway, I looked at the asset class and I knew to generate the best returns, I had to be a generalist. It doesn't generate the best returns on fundraising activity, though, to your point, because you go talk to larger LPs, they're like, well, I could really use more exposure to biotech or crypto or et cetera. They're trying to fit you in a box. You're like, no, 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 no. I'm a general pre-seed fund, right? So I'm trying to behave like a big billion-dollar fund, but I'm not, right? So it makes it a little harder, but it's more fun for me. Like I enjoy investing in a variety of categories more than just one being like, you know, cordoning off myself into a box. But it's harder.
Yeah, so the LPs, as you're saying, the larger LPs create a puzzle or a map, and they're like, I think that biotech's going to be big in the future, so I'm going to do some biotech seed investing. I think AI is big right now, so I'm going to do some later stage AI. And so then they look for firms that are like, early stage biotech, later stage AI, and you may not, as a generalist, obviously you can't necessarily hit those buckets. But with that said, you do have an AI background and pretty interesting AI portfolio. Why don't, before we get on, I have lots of great questions here. I'd love to hear, what are you thinking about AI right now as an early person in AI, working in a big company and now an investor? Are we in a bubble? Is it crazy, or is there still great opportunities to be had? What's your view?
I think you have to be a student of technological history and kind of how it rolls out in the market, right? So like if you look at past platform shifts, revolutions, internet, PC, mobile, cloud, you have to understand where in the cycle you are and invest appropriately, right? So if you're trying to chase foundational models right now, like, yeah, you're too late, right? Those guys are spending billions and billions, hundreds of billions of dollars building those out. You're too late as an investor. You would have had to start investing in 2017. So then you kind of shift up the stack. So I'm starting to look at network layer things. I invest in a really cool company called Thunder Compute. They virtualize GPUs. And so they're trying to do for GPUs what VMware did for regular servers back in the day. If that works, it's a huge venture bet, right? Virtualized GPUs, very cool at the networking layer. We're looking at platform layer opportunities. So we're investors in Bland AI. They just raised a big Series B. It's a huge markup for our fund one. And just off to the races, they do voice agent platform, right? So if you need to build a voice agent for any kind of purpose, you can build on Bland, right? So that's a platform level play. Then you have the application layer stuff. There'll be thousands of winners here. So we're very bullish on the application layer. But you have to be careful there, right? That it's not just a wrapper or whatever. And then I have what I'm calling kind of the labor as a service layer, which is above the application layer. So historically, you had SaaS. You would build a tool and humans would use the tool to get their jobs done, right? It's a CRUD database with an interface, right? Um, and now you have basically startups like one of ours called CollectWise that use AI to replace labor. So CollectWise is growing super fast. We invested pre-YC, helped them get into YC. Um, and so nice little markup for our seed fund. And they use AI voice agents, multimodal agents, text messages, emails to go collect debts on the behalf of past due debt collectors. And so this is like a $50 billion industry. They're paying people, overseas, $5 an hour in the Philippines or Pakistan or whatever to go collect these debts, and they're not doing a very good job. So now here's this AI that can go do it 24/7, never has a bad day. So this is like the capital eats labor thing I was describing. So that's really exciting. So you're seeing this throughout all verticals, all layers of the stack where AI is just replacing labor. So it's going to be a really interesting 5 to 10 years.
So fascinating. All right. So AI is replacing labor in some of these jobs. Collections is a great example, but there's customer support's another classically great example. I would say those are very adjacent to one another. What do you think about AI and VC, right? Because Andreessen just went on the other day and was like, I don't think you could have a AI do the job of a VC for the foreseeable future because there's too many intangibles.
I saw the headline. I didn't watch the interview yet, but he basically said in the headline that I read is, the only job that's really safe is a venture capitalist.
He didn't quite say it that way. It was something to the effect of like it's likely to be one of the last jobs to go.
Right.
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 Uh,
Allocating capital to opportunities, right? And I guess you could make a case that could AI do that better? And will somebody start a venture capital firm? And there are some like Right Side Capital
no cap.
Management.
No cap is one right now.
Yeah, the AI makes all the decision. We just feed it data. I mean, we effectively do that at Team Ignite, but we check the AI's work, right? I'm already using O3, which is a PhD level reasoning model. The top 5% of intelligence on the Mensa scale. It has
Are
140
you
IQ.
using a $200 a month
No, not
pack?
yet. I'm paying the $20 a month for the plus.
All right. So
When
a
I
friend of
yeah,
mine, a very good friend of mine who's doing a PhD on AI ethics, went and he said, look, I got the $200 a month one, the 20 and the free, and compare it with Claude and all the other premiums. He's like, the $200 a month OpenAI model is embarrassingly better than
it's so
everything.
much better. It's the first time that I've actually felt like I'm interacting with this entity that's smarter than me.
Well, the $200 a month one apparently is
Yeah.
order of magnitude because I guess what they do is they not only give you the top model, but they also then give you a much larger compute and context window.
O3 Pro is what you're
Yeah.
describing. There's
And
O3 and there's O3 Pro. Yeah. And it's insane. I mean, it's going to make us all more efficient. It's making everything we do now flows through AI. Like every call transcript, every deck, every due diligence, every data room, every cold submission online. I get, hundreds of those a week. It's all being processed with AI, and AI doesn't make the decision, but it's just like having this analyst that works 24/7. That's a PhD level analyst that can reason through everything and kind of advise you.
so it's basically like let's use a hypothetical scenario here. 100 deals come in. Does the AI help you get to the 10 that you look at? Or like what's the rough ratio? Or is it like AI gives you still look at the 100, but you look like very little at 90 and you look much more at 10 or how walk me through in a
I
hypothetical.
think it's the former. I think it's more like, okay, here are the 10 that you should manually review and check. And I said no to these 80 or 90 out of 100 that are just easy no's.
Right.
And so basically I can give it my framework, ingest all the data that a startup gives me, and basically come up with like, hey, here's the top 10% that I need to review out of the 100 cold submissions that came in this week.
All right, so now let's go into that 10 and say it's like, okay, these are the 10. What is the AI, what are your AIs able to do there? Are they able to say, here are the problems and the good things, and then you can dive deep, or does
That's
it really?
Yeah, that's the most incredible thing with O3 is it reasons probably as good as me, if not better. And so it's like having this really smart MBA level person that I can collaborate with, you know, infinitely all the time. And just help me think through like, is this TAM really big? Is this a 10, like usually you want a $10 billion market when you invest in a startup? Is this really a $10 billion market? Let's think about that. And it'll reason through with me. Like, yeah, here's the top down and here's the bottoms up calculation. I agree with all those things. It cites all its sources. Cool. Yeah, 5 out of 5. So in our framework, 5 out of 5. I agree with that. So it just helps you kind of like reason through. Like I have this 20 factor framework when I invest. So it's like 20 different factors, and I'm scoring all of them on a 5 point scale, and it helps me just reason through very quickly. Like Is this a big market? Is it the right time for this? Is this a really good team? Are these terms reasonable given the market and et cetera, et cetera? Is there a moat here, right? Is this transformative? Is this category defining, right? As a startup, will this redefine a category? So it just reasons through everything. It's amazing.
Are all those some of your 20 criteria? Because someone was asking what are the 20 criteria? So you just,
Yeah, I was naming off some of them. And
you don't
I
have
could.
to tell them all. Like,
No, it's pretty public. I have an article actually on my Substack that you guys can find on how to pitch us, and it's literally I'm very transparent. I tell founders exactly how to pitch us.
all right, yeah, maybe, hey, Domenica, can you find his Substack article on how to pitch Team
It's on
Ignite
my, if you
Venture?
go to my profile, there's like a little link that says pitch us. If you click that link, it'll go to the Airtable form, and the Airtable form it has the article linked. And basically, I asked all the questions very transparently. How big is the market? Why are you the right team for this? Why is it the right time for this? What's your distribution advantage to acquire customers? How fast are you moving? Do you have a moat or not? Is this transformative? uh, you know, Internally we think about, can we add value? Does this help Team Ignite? Does it help the founders on Team Ignite? Can can my network add value? Are they capital efficient, right? Are they burning
And
a
are you
dollar?
using O3 by ChatGPT OpenAI for all this
Yeah.
analysis, right?
For the screening, I just use 4.0 because it's cheaper. The 4.0 does a good enough job and it's integrated with Airtable seamlessly. For the, post call or pre-call when I have data that I want to analyze, I use O3.
I want to double click on some AI things for a moment. I was going through questions there from the audience. Um, what you began in AI at Microsoft and Amazon, like what would you say, like how many years ago?
I started building AI in 2013 at
Okay.
startups. Yeah.
Given where we are today, do you think we're way ahead of where you thought we would be, or kind of it took longer, but we caught up, or
I think we're ahead. We thought we would pass a Turing test in the late, around 2030, 2029, and we passed the Turing test in like last year.
yeah, I know.
So that's pretty,
In fact,
but
it can sound like a human and you can't tell.
yeah.
It's not text.
So the test, I think the way it was written by Alan Turing back in the 50s, like 1952, I think, is he said if a sufficiently advanced computer program can convince more than 50% of humans that it's human, we have basically AGI, basically was his assertion. And so we basically have AGI right now. And it happened faster than I think most people thought. And again, that order of magnitude, if you go read Situational Awareness, which is a paper by Leopold out of OpenAI, it's a 180-page paper. He basically lays this all out with math. What's happening in AI is it's absolutely breathtaking. So the next 5 years is going to be the biggest transition in human history, I think. I think it's underhyped. I think we're about to just cognitively permeate everything with just super intelligent AI systems. It's going to absolutely change work, just how we live.
Yeah, and the O3, these reasoning models, well, they're a bunch. Grok is also has a reasoning model. I guess DeepSeek is a reasoning. So there are lots of them. They're quite good because they reflect. But that was leads to my second question about this, which is one of the problems that I see. I'd love to hear your thoughts on it because I haven't used it at scale for deals like you have. Is that it's really the best deals are non-consensus. Would you agree with that statement as a rule of thumb?
Yeah, that's something else I've probably learned over the years is that you need to have a thesis around what other people are getting wrong about the deal, right? And so that's a non-consensus bet, right? If you
Right,
just
because
take
there could be a very good deal that isn't as popular as the other one. And the reason why the non-consensus deal, just for everybody here, tend to be better is because if everybody likes a deal, it's probably either overpriced or priced correctly at a minimum, right? And if it's priced correctly or overpriced, it's hard to make money unless it's really a big outlier of success. And
the
then,
best breakout startups really change how things are done, right? And they appear ridiculous when you first look at them, right? Like
Airbnb.
Airbnb is a great example. Like, who's going to want to rent out rooms in their house, like to strangers? That's stupid. Uber, who's going to want to like order like a black car? That's dumb. And a lot of people pass. Google was the 17th search engine. Who, like, what? I already invested in Alta Vista and Excite and Lycos. Like, why do I need to like have another search engine? Like, yeah, this is a great team out of Stanford, but like, this is like, they're too late to the market, right? It's a non-consensus bet. So you have to like, you have to think independently, right? And so a lot of investors, especially as you get started and you invest in syndicates, you're just betting on like consensus stuff. And you have to like have enough deal flow to see the non-consensus things in the market.
Right. And a lot of the non-consensus stuff come from weird sources. They're not like, hi,
Yeah, like
like,
space is a non-consensus bet right now, or it was maybe 2 years ago. Now it's becoming consensus, but like you have a company and you're going to send things to orbit for other companies, like, that's weird, you know?
yeah.
It just sounds
So,
far-fetched,
so
right?
and so what my question goes back to AI though. AI is like the ultimate consensus tool, right? It's like, oh, I've been trained on all of human knowledge. It's by definition somewhat of it. Of course, it has alternative views, so it has the ability to kind of edge reason, right? But it is a consensus tool. So do you find that the AI in these non-consensus opportunities is still helpful, or is it actually possibly getting it wrong? Just curious.
Yeah, that's why you have to check the work, right? It's like using a calculator, back when we were growing up, right? You're not always going to have a calculator. Well, it turns out we always had a calculator. In fact, we had really powerful calculators and ever more, you know, powerful computers in our pockets and ubiquitous internet broadband. And so but you always have to like check. You have to use your human reason and intuition, right? More than ever, investing is becoming an intuition game because
That
everybody
that
has
was
an eye.
actually exactly the point of Andreessen, by the way. You just
Yeah,
just right here made the point of Andreessen.
yeah, it's becoming an intuition game where you're sizing up the founder. A lot of what, like, there are no technical moats anymore, right? And so where are the moats created? It's the vision, creativity, ambition, drive, chip on the shoulderness of the founder, right? And there's like 20 things we look at when we say, is it a good founder, right? Um, and it's a feel, for lack of a better term, yeah, it's a hunch, intuition, it's a feeling you get when you meet somebody. It's as simple as that. So sometimes it's like you meet a founder and it's there, at Amazon, when we worked at Amazon, they have this bar raising concept, right? Every person you hire has to be better than 50% of the people in the organization in this role. And so you have somebody that's independent off the team that interviews the candidate and independently, right? Because there's no repercussions because they're on some other team. They're going to come in and interview your candidate and make sure they think they're better than 50% of the people working at Amazon. So when I'm looking at a founder now, I'm thinking, is this founder better than 50 or 75% of the founders I've backed previously? It's as simple as that. So you're trying to back the best founders.
Wow. Yeah, and at the end of the day, an AI can't tell you that.
No, it can tell you, is the market big? Like, hey, I looked at their financials. It looks like they're capital efficient and they're growing in a capital efficient way. They have good logo retention, good revenue retention. They're expanding contracts year after year. Like it can do all that analysis stuff, but it can't tell you if the founder is like a bar raiser.
Fascinating. All right, with lots of great questions here too, so I want to get to some of them. Some of them. Uh, Speaking of founders, what do you think of Jordan's asking, what do you think about investing in repeat founders?
Absolutely. I mean, and that's one of the benefits of being in this industry a long time, going on 7 years now. And I'm getting into that second gen, third gen startups now. People I passed on, people I invested in before, now working on their second or third startup. And founders, I think the data shows that second and third time founders can be a lot more successful. They've learned a lot about what to do and what not to do. Um, they're better fundraisers, they're better at hiring, they're better at finding product market fit, at scaling. They know a lot more. So yeah, I'm a huge fan of second repeat founders.
Yeah, you don't freak out as much as someone who's founded like infinite number of companies like myself. Like it takes a lot to get me to freak out. Okay, so there's a couple questions here about your size of portfolio. So I'll go through two of them. One is, do you see this approach of like many smaller investments changing over time as your fund size grows? I mean, maybe you put more money in, or but still do volume, or you keep volume. Like what's
Yeah, I think I'll still do 150 to 200 per fund. And mathematically, I think that's the right amount, probabilistically assuming I'm average, like I said before. I don't think I'm average, but everybody doesn't think they're average, but let's assume you are. And then yeah, I just would add a zero, and raise a much bigger fund. And
add a zero to like
the
to
25K check, right? Just
250K, right? Okay, yeah, yeah.
yeah, and write much bigger checks with pro rata or super
Not
pro rata.
1,500 firms, right?
No, that'd be crazy. Well, there's 10,000 startups, right, that get funding every year pre-Series A, and about 2% of them will turn into unicorns. So the vision for Team Ignite is we want to invest in all 200 of those, as a higher percentage as possible of the 200 unicorns that are founded every year. Um,
That was the math actually also. So this is like a mini Andreessen interview. He kind of went through exactly what you just said as well, where he's like, there's this many unicorns, and if you were only so lucky to get in every one, and the reality is no investor's that lucky because no one's ever gotten really that type of eight
there's
out
no
of 10.
public market for startups, right? It's all private markets. It's all relationships, brand, network, access, value add. And, so there's a lot of, it's not like a public market where everybody is at the same starting line, right? Not Andreessen has an unfair advantage, right? They have the biggest, one of the biggest networks. They have one of the biggest portfolios. But if you look at their historical unicorn hit rate, it's like basically average.
Yeah. That was his point. It's
Yeah. They're basically hitting unicorns no better than anybody else. I mean, SV Angel has a higher percentage. YC has a higher percentage historically, roughly, 4 or 5% for each of those. So they have some magic in the way they process and their brand and their ability to pick really amazing teams. And if you look at YC, they're just picking really, really amazing teams that come through. They usually pivot. They usually have no traction when they start. They're just going and building shit that people want. And like it goes back to our, it's just a hunch that you get when you look at a team. Is this a quality team? Unlike other places in finance, in investing, past performance in venture capital and startups does predict future performance. This is the
so
only asset class that's true because of brand, because of network, because of access.
let me get to some other questions. As Grace, I see, was like a lot of people are saying this is one of their favorite sessions. I looked at the time earlier. I'm like, I could talk with you for another hour.
And we've probably talked for hours
Yeah,
before on that
well,
subject.
but so Grace is asking, how do you manage such a large portfolio and LPs? And I can just tell you that Brian is one of the masters of list management. He's an avid user of our platform, constantly nagging us for Marcom
I'm
improvement.
basically a product manager for Decile.
You kind of are.
Yeah, I meet with the product team all the time. We're all first name basis with the entire product team. I'm giving you guys, yeah.
And it's great because but so he's a avid Marcom professional in terms of managing lists of founders, LPs, and everything in
I ran
between.
demand gen teams before I became a PM, and then I built ad tech, martech, sales tech, AI powered products. So I run my firm with those skills.
Yeah. And look, the reality is, guys, you got to learn the skills. The email I sent, by the way, when I was coming on, I'm sorry for being a couple minutes late because this is so amazing, was literally like to the cohort 817, get your demand gen in order. You need to be sending 30 emails out a week, at least 10 to 15 meetings a week.
30 a day.
Yeah, yeah.
30 a day. And I don't have a hard stop. So if you want to go 5, 10 minutes over, I'm
I,
fine. So,
I unfortunately do.
yeah.
So he uses Decile Hub among other tools was one of the questions. Let's leave with this question. By the way, this was amazing. We got to make this a video and get it out. This is a great one. So what would you do now if you were entering in the market with all the knowledge? And by now meaning like right now in the world today because it's a little bit different than when you started with the volatility. So what would be some advice to managers starting
Yeah, I
out?
mean, if you want to become a VC, I think the first thing to do is start. You just take the next step. Start building your network, start building your brand, your ability to add value, start doing deals. Yeah, just start. You just got to start somewhere. I started with like little checks. I was an LP in a bunch of funds. I sat on investment committees for funds I was an LP in. I advised a friend of mine how to raise a fund. I helped him raise a fund, help him make investments. Just get started somewhere. Nobody's going to give you permission to become a VC, right? Nobody like unless you go to like Stanford or Harvard or something, and somebody just opens the door, like, "Come on in, old boy," old chap. I spent a hot minute. I'm a Berkeley MBA. I'm a white dude. Like, give me a job in VC. I spent like 3 months, and nobody gave me a job. So I was like, well, I'm just gonna create my own firm then. I got tired of going through like really long interviews with like 10 different partners who've never built anything. So figure out what's unique about you and then lean into it. There's no wrong way to do VC, but there's plenty of wrong ways, right? So just get started and figure out what's unique and go apply your own, you know, crystalline snowflake structure to the world and just go do it.
And by the way, you've done that, and I'm really proud of you. Wow, this is amazing. I think this is also one of my favorites. So thank you everyone for the great questions. Thank you, Brian, for this amazing thing. I actually think you said equally interesting and in some cases very similar things to that interview with Mark Andreessen. So if you missed the interview with Andreessen, you got a better version of it right here, especially if you're a new manager. Brian, thank you so much. And let's do it again.
Yeah, thanks for having me.
Great. Thanks, everybody. Bye, everyone.